Collective research. Active fundamental research in global capital markets. Make informed decisions.
Taxation in United States. The United States of America has separate federal, state, and local governments with taxes imposed at each of these levels. Taxes are levied on income, payroll, property, sales, capital gains, dividends, imports, estates and gifts, as well as various fees. In 2020, taxes collected by federal, state, and local governments amounted to 25.5% of GDP, below the OECD average of 33.5% of GDP.
Sources of federal revenue. Total revenue has increased from $4.20 trillion in 2015 to $4.44 trillion in 2023.
Individual income taxes. In fiscal year 2023, the combined contribution of individual and corporate income taxes is $2.60 trillion, making up 58% of total revenue.
Income taxpayer U.S. The rate of tax at the federal level is graduated. That is, the tax rates on higher amounts of income are higher than on lower amounts. Federal individual tax rates vary from 10% to 37%. Some states and localities impose an income tax at a graduated rate, and some at a flat rate on all taxable income.
Marginal tax rates and income brackets for 2023.
In total, about 59.9% of U.S. households paid income tax in 2022. The remaining 40.1% of households paid no individual income tax. In that same year, about 47.1% of U.S. households with an income between $40,000 and $50,000 US paid no individual income taxes. About 59.9% of U.S. households paid individual income tax in 2022. The remaining 40.1% of households paid no individual income tax. This is because there are a number of factors that can exempt a person or household from paying income tax, such as low income, age, disability, or certain types of income. It is important to note that the percentage of households paying income tax has been declining in recent years. This is due in part to the growth of refundable tax credits, such as the Earned Income Tax Credit, EITC, which can actually give taxpayers money back even if they have no income tax liability. Here is a breakdown of the percentage of households paying income tax in 2022, by income level. Under $30,000, 39.7%. $30,000 to $50,000, 52.9%. $50,000 to $75,000, 67.1%. $75,000 to $100,000, 79.3%. $100,000 to $200,000, 88.4%. $200,000 to $500,000, 96.2%. $500,000 or more, 97.6%.
More than half of American households paid no federal income tax in 2021 due to COVID relief funds, tax credits, and stimulus, according to a new report. The Nonpartisan Tax Policy Center estimates that 57% of U.S. households paid no federal income taxes for 2021, up substantially from the 44% before the pandemic. Since most workers pay payroll taxes, the share of Americans who pay neither payroll or federal income taxes was only 19% in 2021, slightly higher than the 17% rate before the crisis. The U.S. collected $5.03 trillion in federal revenues in 2022, up $630 billion from the previous year, after adjusting for inflation. That equates to $15,098 collected per person, up 14% from 2021. Most revenues came from individual income tax, at $7,898 per person on average, and payroll taxes, at $4,510 per person on average.
The top corporate tax rate in the U.S. fell from a high of 53% in 1942 to a maximum of 38% in 1993, which remained in effect until 2018, although corporations in the top bracket were taxed at a rate of 35% between 1993 and 2017. After the passage of the Tax Cuts and Jobs Act, on December 20, 2017, the corporate tax rate changed to a flat 21%, starting January 1, 2018.
State corporate income tax rates and brackets for 2023. 44 states levy a corporate income tax. Rates range from 2.5% in North Carolina to 11.5% in New Jersey. 4 states, Alaska, Illinois, Minnesota, and New Jersey, levy top marginal corporate income tax rates of 9% or higher. 11 states, Arizona, Colorado, Indiana, Kentucky, Mississippi, Missouri, North Carolina, North Dakota, Oklahoma, South Carolina, and Utah, have top rates at or below 5%. Nevada, Ohio, Texas, and Washington impose gross receipts taxes instead of corporate income taxes. Delaware, Oregon, and Tennessee impose gross receipts taxes in addition to their corporate income taxes. Some localities in Pennsylvania, Virginia, and West Virginia likewise impose gross receipts taxes, which are generally understood to be more economically harmful than corporate income taxes. South Dakota and Wyoming are the only states that levy neither a corporate income nor gross receipts tax.
If you would like us to research a stock, please tweet at Collective Rec or leave a comment here.
Like and subscribe for potential investment ideas. Become a member at www.collective-research.com.
Receive investment ideas before they are published.
Collective research. Active fundamental research in global capital markets. Make informed decisions.